Yeah, look, I mean, semis, you're right, have had a bit of a challenging week or so the last 5 or 6 sessions. It's generally people are just worried that we're getting closer to peak cycles. Semis in general tend to be anticipatory. There's a phenomenon that happens during shortage periods, and we all know about the shortages that are going on where people, when they can't get the parts that they need, they actually order more than they need. And so even though the overall demand environment still looks very strong, people are still unsure how much demand is real and how much is phantom. And we're starting to see some signs, like the stocks in general tend to trade on what they call like the second derivative, like anticipations of change. We've seen things like notebook computers, Chromebooks, especially as you know, the people are going back to school, those sales have started to roll off. People are now worried about memory pricing starting to fall into the end of the year. This is why the semi caps and like the memory names over the last 5 or 6 sessions have sold off. But in general, people just worried we're getting closer to peak, and semis are anticipatory. So that's why we're seeing the behavior we're seeing right now.
Yeah, we want to be at peak inflation. We don't want to be at peak economy, you know. So it's kind of a reminder that it maybe is all tied in together. But I know you don't cover the memory names, but can you just elaborate on that for a moment? Because it was pretty notable to see the big declines there this week. And that's why people are going, well, wait, the memory names are down. The semiconductors are down. And again, what are these data points telling you? I mean, there's a difference between, okay, it's not going gangbusters and, hey, it's still pretty healthy growth. But what do you read through it?
No, that's true. But let's take memory. So you're right, I don't cover the memory names, but that's okay. We can talk about those. Memory goes into everything, right? So I mean, it is in some sense maybe people look at it a little bit as a bellwether. It's also impacted very significantly by supply and demand. Memories are commodities. The pricing of memory is a function of the supply situation, the demand situation. So when pricing is going down, it means one of two things: either supply is getting better or demand is getting worse, right? And so this is why we've seen them as kind of seen as a bellwether maybe for the rest of the space, although they've been impacted much more. I mean, the memory stocks and by proxy, the semi caps that are also tied to those, they're probably down, I don't know, 10 or 15% the last week or two. I think the overall stocks of the last week or so is down like 3 or 4. So certainly we've seen it's impacting everything, but certainly it is being seen much more in some of those broader cyclical, like widespread areas like memory.
In simple terms, what's happening, I think you're saying, is that supply is improving a little bit, but demand is improving maybe even a little bit more.
No, the other way around, I think, is the worry, right? So if the supply-demand imbalance is getting better, it either means demand is getting worse or supply is getting better, right? And again, we've seen some signs, right? So, for example, PCs, they use DRAM and some other types of memory. We started to see some signs that in notebooks, which, by the way, notebooks have been incredibly strong over the last couple of years in the wake of COVID. We're starting to see some signs that those are peaking and starting to roll over a bit. Memory goes into phones, it goes into servers, it goes into everything that you can think about. So it is in some sense seen as a bit of a bellwether. And when those prices are starting to roll, I mean, memory stocks go with it, and by proxy, lots of other things will follow.
What is the matter with Intel? I mean, it has been one of the great companies.
There's a loaded question,
right? You know, well, I mean, it's just sitting right out there. It's a layup to me. I mean, it was one of the. I grew up with Intel. It was one of the great companies of the last 50 years in America. There's almost no company this side of Apple that's more American than Intel.
Look, so stock prices are not backwards looking. Stock prices are forward looking. And the Intel today is not the Intel of, 50 years ago or 40 years ago, even 10 years ago. Intel has a lot of structural challenges. And yes, the stock is cheap. It is likely cheap for a reason. I always say this in semis and frankly in tech broadly, like cheap all by itself is never a reason to buy a stock. Just like expensive all by itself is never a reason to sell it. Intel's cheap for a reason. Market share losses. They came out a couple of weeks ago and told everybody that they're going to remain behind on process technology, at least for the next 4 years. We could probably have a whole conversation just on the issues at Intel, but the long story short, I think the stock is cheap for a reason, and it is not something that I would be looking to buy even at these valuations.
I love how you said that. I mean, we talk a lot about value stocks, and sometimes stocks are valued where they are for a very good reason, and that it's not merely that they're overlooked. They've been looked at, and people are pricing them where they are.
One thing Intel is not is overlooked. I mean, yes. Everybody has to look at Intel. I mean, Intel's a bellwether of the space. They're the biggest company. Well, by revenue, they're one of the biggest companies in the space. They used to be one of the biggest in market cap, although some others have surpassed them now. But Intel is not overlooked. Everybody is looking at all sides of that story 6 ways from Sunday, and the market is telling you what it thinks right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.